So what we're going to look at in this video is the difference between growing a business organically and growing it through using investors. An organic growth would be just taking profits and revenue from my business and rolling them forward into the next year. Investor-led growth would be if I went and got friends and family or an angel or a venture guy to invest and buy into my business. So let's use an example here. So let's assume I have a baking business and I make the best cupcakes in my city. They've been reviewed and everyone loves them. And I've come up with this new business model to sell them, and it's called the cupcake machine. And the way I sell cupcakes is to go to local retail stores, and here's one, we'll call this Moe's, and I put one of my machines into Moe's store so I can sell cupcakes. Here's one of Moe's customers. When a customer comes in to buy a sandwich, and they also buy a cupcake from my machine. So let's have a look at some assumptions around my business. Firstly, I'm going to assume that Mo and myself split profits half and half. So anything I make from the machine, Mo gets half and I get half. Let's assume that each cupcake machine generates $22,000 in revenue per year. What do we need next? It costs us, or me, $2,000 to stock the machine and keep it maintained each year. So that's the cost of making cupcakes and putting them in there. That's maintenance. And what this means is our profit for me and Mo to share is $20,000. And if we share that half and half, my profit is $10,000. Whoops, looks like a 1, that's a comma, per machine per year. And the final assumption we're going to need, and we'll make this simple, is each machine costs $10,000 for me to buy. So it's like a capital fixed cost. Right, so I start my business in year 1 and I seed it. I use $10,000 of my own bank savings that I've made from my cupcake business to buy a machine. And I go and put machine number 1 in Moe's. And that generates me $10,000 in profit. There it is. Remember, and its cost, the cost of that machine was $10,000. Which means in year 2, after people have been coming to this machine for 12 months, I will have made $10,000. And what I'm going to do is take that $10,000 and I'm going to roll it forward, and I'm going to put another machine in Buddy's gas station. So there's Buddy's, and that's machine number 2. He's also going to make me $10,000. So in total, I'm now making $20,000 at the end of year 2. And if we keep this going, let's take it to year 3. In year 3, I'll be able to add 2 new machines, 3 and 4, and they'd each make me $10,000. So combined, I'm making another $20,000. So in year 4, my business is going gangbusters. I'm going to take the $20,000 I make here from these 2 and the $20,000 I make from these 2 machines collectively, and I'm going to roll that $40,000 in profit into 4 new stores in my neighborhood. So I'm putting them everywhere. Putting them in the hairdressers, and putting them in the dog store, in the bike store, and in another gas station. I've got 4 machines here selling cupcakes. They will make me $40,000. $80,000. So let's kind of summarize this out. In year 1, 2, 3, and 4, my profits in year 1 are 10,000, 20,000. This is total profits. They basically double each year. So in 4 years' time, because I've got 8 machines, I'm making $80,000 a year. Boom, not a bad business. And it's all organically grown because I've been rolling profits forward each year. So what would happen if I took on an investor? Well, let's go back to year 1. And I was so confident in year 1 of my plan. I'm like, I'd love to be able to go out and raise $80,000 in cash so I could start with 8 machines. So I go to friends and family and a couple of the neighborhood businesses. I explain to them my business and they give me $80,000. So in year 1 I can go and buy 8 machines. So immediately I'm making $80,000. And now each year this is going to carry on doubling. 16 machines, 160,000. This is profits, remember. 320,000. And in year 4 I'm now making $640,000 per year. I am one happy cupcake. So what was the cost of this? Okay, I got investors here. This is the investor-led route. They gave me $80,000 and it was risky. They asked for half of my business. And this was back in year 1. So I sold them half my business for $80,000. Basically then my effective profits are half of the total profits from the business. So here I go, after 4 years, I'm now making $320,000 for me. And that's compared to that. Now another way of looking at this would be to say, how long would it take me to make this here if I'd grown organically? Well, we know that profits are doubling each year, so year 5 we would have got to 160,000, and year 6. So I, in effect, over here, let's have a quick change of colour. I have sold half of my business for $80,000 to get where I wanted to be 3 years quicker. Is that worth it? Well, in future videos we'll actually look at what it can actually mean to take on these investors.